Right, everyone. We are going to get started. Thank you for joining us today. We're excited to dive into um, I think it'll be a pretty good discussion about forecasting, and in particular, multidimensional sales forecasting. So we'll talk a lot about where we are, I think, in generally as an industry today with sales forecasting, how we typically think about it, and what it means to go beyond and to get into some more robust views of the business, I think. And I'm really excited to be joined by two pros in this space, have been doing it for a while and done it in many different settings in small companies, growth stage startups, public companies, and everything in between. Um, so first, I'd like to introduce Franco Anzini, who joins us from Provis. And Franco, maybe you can tell our attendees a little about yourself.
Yeah, happy to. Thanks for having me, Dustin. This is an exciting topic that has changed dramatically over the years. So it's good that we're talking about it. I've been doing revenue operations and operations at large for longer than I care to admit, which explains all the gray hair. And forecasting, no matter how you slice the rev ops and the operations function, forecasting is so central. Everything that a business does builds off the either the revenue forecast, the bookings forecast, whatever the metric is. So have been leading forecasting efforts at companies of all shapes and sizes, as you alluded to, small startups that you got to get the forecast right, or you might run out of money, all the way to big companies, public companies where you got to get your forecast right because that's what Wall Street's expecting. So I have seen a variety of different shapes, flavors, and sizes of it. Happy to be here.
Yeah, I look forward to diving in. And then we have my colleague and partner, Jeff Serlin. Jeff,
Hi, everyone. Glad to be here. And Franco, excuse me, Franco, thank you for joining us. As Franco was talking about how many years he's been doing this, at least you still have some hair. So I think when you catch up to me in a couple of years, maybe you'll look like me. I was actually trying to think of how many quarters I've been leading sales ops and rev ops, and then how many weeks I've been helping to, prepare and design forecasts, and it's in the thousands and thousands. I couldn't do the math quick enough. Um, the purpose of them hasn't changed. Why you do it hasn't changed. The techniques, the understanding of how to get better at them, I would say, broader management team taking more of an interest in them. And especially, I think the recent trend, which hopefully we'll be able to talk about today, Dustin, is what's the difference between just reporting it and then actually doing something about it? So, the action orientation of these things, which I think a lot of the tools and solutions and process and methodologies that we can use now can very much help um, make them more valuable and actually changing the business outcomes as opposed to just knowing where you might land.
yeah, exactly. And it's a topic, Jeff, you and I spend a lot of time talking about, right? At Revcast,
Mhm.
where we focus on how do we connect what's actually going on in the business to things that we should be doing in the business, thinking about where we should be investing our time, our money, our people, everything. How should we evolve go to market strategy based on what's actually happening versus what we thought might happen or what we plan to happen? We spend many hours talking about that
We do.
every day, for sure. So, guys, I want to get started and just a quick rundown of for the audience of the conversation today, and then very much be a conversation. We're definitely taking any Q&A that you have, um, in the webinar. Sales forecasting today. I want to start like, what is it like, and how much has it really changed? What we often overlook, the weekly sales forecasting game is a grind, right? Like there's multiple levels of prep that's happening from the individual rep to the first line manager, and depending on how large the company is, we spend hours in either prepping or in forecast meetings, typically every week as a company. So what are we not looking at? How are we thinking about that in terms of forecast accuracy? And I do want to talk about AI and the role of AI and what that means, especially Franco and Jeff, given your RevOps backgrounds, where I'm sure have deployed many people to go help prepare and run these from a cadence standpoint. So with that, let's talk a little bit about what's happening today in the market. And before we dive into some of this, and I think there's some interesting data here to talk about, but Franco, I'll open it up with you. You know, you've sat in sales forecast calls and run them for companies at various different stages. How different are they really? Like if you look across the spectrum.
Yeah, I think they vary on some sort of structured scale, right? I think smaller companies, um, maybe it's a bit more free flowing and ad hoc, whereas you get to large public companies and there is a defined cadence that the organization follows. Um, and they've got their way of doing it, and that's the way they do it, right? So everyone else falls in between. And I think that's where you really start to get a lot of variability with that middle quadrant. And then it's interesting because the larger companies that are maybe more set in their ways and have a more regimented cadence, they don't deviate from that cadence, which can be problematic, right? If something changes in the business, you're just continuing to do the same thing, look at the same things. And so I would say it's pretty static, let's say. And the lens or the aperture is not very wide, or maybe as wide as it should be.
Yeah, and that's a really good point, Franco. Jeff, you and I talk about this a lot, right? When we think about the time, and you and I in a prior life, we spent a lot of time in forecast meetings together. I know what we focused on. I know what I focused on in every other forecast meeting I've been in different companies. We talked a lot about deals, right?
Yeah, absolutely. I think that as much as we all want to sit back and say we need to forecast for the longer term, we need to look out at future quarters, we need to look at, other dimensions that can impact forecasting, we still always bring ourselves back to how are we going to make this quarter's number? And when you start doing that, you start looking at pipeline. But we're not really looking at pipeline in terms of coverage ratios or build to next quarter, or maybe even sources or the waterfalls of what's changed or Sankey's. Um, we're really looking at pipeline of what's in there now, which are deals, and then we start talking about deals. And I think that's just the natural tendency. And then maybe for the last like 3 minutes of the forecast call, we start talking about all of the other things. And I think that's a mistake because deals are only one part of it. There's a whole bunch of different other parts that, depending on your business, the size, whether you're, higher velocity or larger enterprise, the industries you sell to, whether you're global or not, all have an impact on that forecast. And there's a great question by Vivian. It might, I think it's something we're going to talk about later, but, people talk about forecast accuracy and what should it be. And I actually don't love the concept of accuracy, because what does that even mean? Do you want to be accurate in the
Yeah,
first month of a quarter? Well, if your first month of a quarter you're forecasting 80% of plan, I don't want to be accurate.
right,
What
right.
I'm really looking for is as she says in here, is the probability that one of those factors is telling me might land up here, and I know my historical range is plus or minus something. And another factor, say pipeline, what I'm creating says I might end up here with a plus or minus probability, and triangulating all of those gives me like, the hurricane cone. I do live in Florida, which is why I have that image. And, we get hit with a lot of hurricanes and we see that cone. I want to kind of build that cone and see where I might end up and then improve my outcome. So I don't want my initial
Yeah.
forecast to be accurate if it's below plan, right? I want to be able to trust it, to trust that everything I know now is going to lead me to some outcome. And then I want to take the appropriate action to change that outcome to get there.
And I want to get back to that, Joe. I think that's an important point. We talk a lot in forecasting, and we measure our teams. I mean, last company I was at, we had a contest. 6 weeks into a quarter, you called your forecast for the quarter, and we had closest to the pin, and we would reward sellers who were the closest, managers who were the closest, and and leaders that were the closest. Now you had to be at a certain level of attainment to qualify, so you couldn't just forecast a bad number and hit a bad number. But we talk a lot about accuracy, and I think there's a means to that end that I definitely want to get into and come back to a little bit later. But let's talk about confidence for a bit, because I do believe like this, and Franco, like this narrow view that we typically take to sales forecasting, I believe results in what we see up here, which is 80% of go-to-market leaders said they missed at least one forecast, one quarterly forecast last year, and over half said they missed more than one.
Yeah.
And that leads to what you see in the middle, which is, well, the executive teams start to really discount and maybe just lose confidence in where the go-to-market team is going. Like, what have you seen along? How many conversations have you had, with CROs and other executives about like how confident should I be in what you're saying?
Yeah, there's I think some earlier type AI functionality in the forecasting space started to open up CROs' eyes to this, because it gave them a mechanism to ask the question where they'd be saying, I'm forecasting X, and this AI model says I'm going to be plus or minus 5% of that. It prompted them to ask the question of, how did we get here? How was that model figuring out these moving parts, right? And I think it speaks to the fact that a forecast is a point in time. And when we talk about like opening the aperture up, it's super important to know, how did we arrive at this point? What are all the moving parts and puzzle pieces that got us to where we are? And then, because this is just to what Jeff was saying, like we want to make this quarter, okay, but what about next quarter? And what about 2 quarters out, right? So how did we get here? And then what happens afterward? I think are things that people have started to ask a little bit, and it's a little uncomfortable because they don't always get good answers, right? The how did we get here is a little bit more trustworthy, because it's historical, and people can have more comfort in historical data. But the where are we going? What happens next? Now you're projecting, and you're getting to it depends land. And so I think that uncertainty is prompting people to just really not embrace that as much as they should, with all the tools and the tech that we've got at our disposal.
Yeah, absolutely. And I think one of the things that we often see is that if you, and I like that counterbalance, Franco, of like, yeah, we got to make a quarter, but guess what? The calendar flips day one, new quarter, we've got a whole nother ball game that we've got to go play,
Yeah.
and that just keeps happening. And it's, well, how do I put my team and my org and operational rigor in place where we're consistently being predictable, we consistently see things early. And to Jeff's point, I don't want to be accurate, first week of the quarter. Like, I want to know where I need to go invest time. And I think that's a kind of a good segue into part of our next topic, which is, well, we've talked, you've said, Franco, a couple of times, like we need to widen the lens, or alluded to we need to widen the lens. Jeff, you talked about, well, we look at deals and we look at pipeline, but not really. Like, Jeff, how would you describe what it means to like fully open up and create a great forecasting machine?
Yeah, I think just taking a step back, confidence, trust, predictability comes with identifying the why and taking action and measuring the results of those actions, and that repeating or getting into the same situation next quarter. Right. Um, and I don't think you can do that just by deals. So, you have to look at all the things that are on this slide, whether it's 4 boxes or 5, however you want to break it up. For example, you might just be looking at, say, pipeline per AE or created pipeline per AE, and maybe that's healthy, especially compared to plan. You're like, this is good coverage compared to what they have to deliver. And maybe the sales KPIs, the performance ones on the right are healthy. You're okay with your win rates and your ASPs. But the why behind why there's healthy pipeline per AE might be because you're 2 or 3 or 4 or 6 AEs behind plan. So you don't have the capacity. Like, even if you're performing well, you're not going to get there. Or maybe you're looking at the mix of sources and you had a big shift to a source that just has half the conversion of, say, a healthier source. So you're also not going to get there. So you have to look across all of these things to build that confidence, because if you don't, you're going to have major blind spots. And this isn't to say that all of them are relevant from where you are, or maybe even every week, and they will evolve over time. But someone has to keep an eye on these and raise these up the ladder and understand how they all interact with each other. Um, Healthy one might actually not be healthy if you dig in. An unhealthy one might actually not be unhealthy because you're digging in and finding the drivers of that. And that's where I think the insights come from. That's where AI can help. And that's where you come up with the right action at the right time. Pumping more pipeline with a low converting source isn't going to get you there. Maybe like doing better and hiring on time and retaining your best reps is going to actually get you there.
Yeah, I mean, I think in many ways, and I'll go back to your hurricane phone analogy because being in New Orleans, that rings true to me as well. Um, but I do think in many ways what we're talking about is being able to triangulate and to refine um, based on multiple factors, right? And understanding near-term health, but to the point both of you are making, understanding what this means for the longer term, both in likely revenue outcomes as well as business decisions. I'm curious, Franco, like from your perspective, when you look at these other things beyond deals, and we look at things that are beyond the basics of pipeline, like coverage and stage-based coverage, why don't we look at these more? Or do we? Do most are most teams looking at these weekly? And I
So
just don't see it.
yeah, so there's actually a good comment in the questions, Dustin, that ties right into this, which is from an anonymous attendee, so I can't give anyone credit. But many believe that covering these other things in QBRs is enough. Like, why isn't that enough, right? And I think that we're starting to go down the path where the capacity, hiring, the pipeline quality and the velocity of it and performance metrics that has traditionally lived in these QBRs, and they happen once a quarter, right? And so people again are comfortable with that, but if you're only looking at these every quarter, it really minimizes that reaction time. Whereas if you pull it in to part of a regular, say, weekly forecasting cadence, you're getting that data so much earlier, you can act on it and it can still have impact in the period that you're in or you're planning for, right? It's taking it from retrospective to um, current, that is actionable. So I think everyone has seen the analysis and the visibility of these. It happens um, not in unison with a forecasting process. They're treated as separate. And the way we've laid them out here in the example that Jeff gave, things like, do you really think you have enough people? Because everyone's got enough pipeline. Like, have you looked at that? And that needs to be part of the forecast discussion. You can't do it post fact in 3.5 months when we're looking at things in review. So people pay attention to them, but not at the right time.
Yeah, I,
Or,
I think that's. Go ahead, Jeff.
I was going to say, why do you forecast in the first place? If don't call it a forecast call if you're just going to review deals, call it a deal review. You
Yep.
forecast so you can identify risk and
Yep.
opportunity. And we know the earlier you can do that, the faster you can make adjustments, the faster you can create a tiger team to fix problems, the faster you can lean into the strength. And if you only look at these things once a quarter, every 3 months, and you look back, you've
Yeah.
missed the boat and you missed the opportunity, probably for the last quarter, but also the current quarter.
Yeah.
you should be looking at your day one pipeline build for next quarter based on updated coverage ratios that you believe you need to have in there on day one with the amount of create and close that you get and seeing how you're pacing to that. Like, why wouldn't you look at that every week and know if you're ahead or behind? Because once you get into that second week of the quarter, when you do QBR, and I've worked at places where all of a sudden you realize at that point, like, oh my God, we don't have enough. And then you just do things that are, long-term focused, right? So the earlier you can do these, the more often you can do these. And certainly it's a difficult thing to do. Both Frank and I have had large teams. It's a lot of data to crunch through. It's a lot of things to look at. It's a lot to analyze. But with some of the new tools that we talk that are out there, you can automate this. You can build workflows. You can use AI and AI agents to help you just always have these things and bring your eyes to the areas that you want to dig into, right?
Yeah.
Yeah.
Yeah. I mean, I think that's, largely, Jeff, for us and Revcast, for instance, like that's what we focus on. We focus on making this accessible, tying together. I think a lot of what, and me being a sales leader, working with you and your teams very closely throughout my career, I was heavily dependent. I didn't have I had to work through the team, and the team was always overburdened no matter how big they were. They were always running around doing tons of projects, serving lots of different masters across the org. I know you guys appreciate that better than I do. And so there would be a bottleneck, and as a result, we'd all end up starting to do a little bit of our own data analysis, and we'd show up in meetings and have wildly different points of views based on like just things as basic as we calculated some KPI differently, right? And then we get in this just wasteless wasteful discussion about like what's going on in the business. But I'll go back to forecasting for a bit and the mindset of a forecasting call. Me as a sales leader, when I went into a forecasting call, I was thinking, where are their risks? And I was largely thinking, where are their risks based on deals? Like, which ones are the riskiest that we need to go shore up? What kind of help do I need? What do I need from the sales engineering team, right? What do I need from other C-level executives to shore this up? And so for me, forecasting got really associated with risk. And then when things were going well, forecasting was like pro forma. It was let's show up and talk about we're having a great quarter. And I do remember, Jeff, the places we worked together at one point, we were just growing very, very quickly and just, exceeding quarter over quarter against target. And we lost sight of the capacity part of the equation. We lost, and so once we realized that in a QBR that we had lost sight of that capacity part of the equation, it took months to catch up. Hiring is not something that you can just like snap your fingers and put people in and be effective. There's so much that goes into that: recruiting, ramping, enabling. Lots of hires don't work out. That's just the nature of the business. I know you guys have some war story. Tell me a war story where one of these things just caught you off guard and what it did to you.
I mean, I can tell you the story. A couple companies ago, we were growing and setting the bar high and hitting it every time. Um, but it was a January 31st fiscal year, and we had probably 45 to 50 quota carriers. And then that first week of February, 7 or 8 of them attrit unexpectedly, and we didn't have that incorporated in the forecast. And so exactly what you were talking about with capacity, all of a sudden we're under capacity. And I've already got the annual plan in place that assumes full coverage. And I physically cannot hire and ramp people fast enough to catch up. So on the 6th day of the year, you're already chasing your tail. And you've got no way of doing this. And in retrospect, you're overachieving, you're doing well, but if we would have forecasted that piece, at least we would have had a little bit of coverage that we could have absorbed. And so turned out to be a rough year, right? To no one's surprise. This was an enterprise play. You don't just pick people up off the street and ramp them. It's 6 to 9 months before they're quota carrying, and by then you're in October and you're already planning next year.
Yep.
Yeah, I was going to go to a similar place with attrition. And I think I can describe a similar situation as to Franco of really good high growth. This is a company I was at when I think we first met Franco, and we were public at the time, and all of a sudden your sales teams get bigger. People come after them because they're successful, and after club, after they get their last commission check for the year, we had a lot more than we ever anticipated. Um, but a similar scenario as a company a little bit later is we tried to promote half of the reps from within, and that was just done randomly. Someone would attrit from enterprise, they pull someone from mid-market, and they just go do it. And that's also attrition. And we had to start doing two things, or I did from the first one thing is I really tried to model and understand attrition, not just like straight line across the year or the overall annual attrition rate, which means nothing to me, is what times of the year do we believe that we're going to have attrition? And based on the hiring plan, how many of each of those hires do I think are going to be internal promotions, which is attrition to where they're pulled from, and then add it to the plan, the backfills offset by some ramp time, and worked with my finance partner in FP&A to do cost analysis, not just of a little bit of extra cost it might take to backfill these earlier, but also the opportunity cost of having a ramp, losing the productivity, and putting the risk in the forecast. And we were lucky enough that we did enough of that analysis in order to get approval to do these things. So we started hiring ahead of attrition. If someone didn't attrit, then we just use that to fill another head count. And that worked really well to closing that attrition gap. But if you're kind of not looking at those things, you're not looking at the real ramp time as opposed to what you might put in a comp plan.
Yeah.
Like, how can you have 30% or more of your reps that are in their first year and you think they're fully ramped now because they've been there for 5 or 6 months, think that they're going to generate 50% of the revenue or even 30% of the revenue for that quarter. And you can't do that unless you look at all of these things or a number of these things that you see on here and really do the analysis and come up with a solution
Yeah.
and incorporate
Yeah.
into your forecast.
Yeah. And so much of this too is about, there's a lot that goes into so just the deal level forecasting. I mentioned when we kicked off the call, I spent hours a week prepping and or participating in forecast calls. So if you think about just what goes into that, and then we look at, people capacity, constantly staying on the top of a capacity, which, Franco, you could tell us, like, if you have 45 or 50 quota carriers, even if you're not planning to hire, things are going on all the time. People are leaving the business, they're going on leave, they're getting promoted. You've got a backfill. So you've got that. You've got pipeline and how pipeline changes over time, and how source performance changes over time, how cost changes over time. You've got performance. And I'll talk about this later, but I think performance is something that we don't individualize enough. Like we tend to look at team or segment performance versus what are the individual differences in terms of performance. If you didn't have a system to help you do this, like, what are we talking about here? In a team of 50 sellers, how many RevOps people would you have to throw at this if you wanted to look at it weekly?
Well, it would be a handful of RevOps people, but I think let's not underplay the other parts of the organization that would get sucked into helping to support this thing, right? And Jeff talked about it with his attrition story. Like we can't just hire people on our own. I got to go get my finance business partners involved, and so now they're part of the puzzle, right? And I've got to be planning for that. I can't just manufacture pipeline out of thin air. I need my marketing business partners to provide some insight and some context, and now I got to pull them into the thing, right? So before you've had systems and reliable data and processes to govern a lot of this, it was just like roomfuls of people. Um, I mean, I remember very, very early in my career, at a large public company, the forecasting process. I mean, when we rolled it up from all the international regions to the main forecasting call, there must have been 40 people on that call every week, ranging from finance and HR and marketing and um, there's a demand component if it's not just software, if you've got, hardware demand constraints and you got to manufacture something. So like it's a lot of people power.
Yeah. Yeah. And I know when, for us with Revcast, like automating this was a huge core, and it continues to be a huge core focus. Like, can we give you these four lens into your business? And that's the kind of the core part of what we do at Revcast. But I think, and Jeff talks about this a lot, it is understanding what all of it is saying, right? So we're not just looking at a BI, a series of dashboards. We're not going hunting and looking, but what does my current performance and my current capacity, my future targets tell me about hiring? Like, how should I think about that? Should I accelerate hiring? Should I move hiring around to different areas of the business? Should I hold back heads? And Jeff, this is something that you talk about a lot. I think it's, given your industrial engineering background and just everything that goes into like the warehouse floor, the supply chain. These things are so interconnected. Like, it's really about decision making.
Yeah, it's tough decision making, and you have to do it in a multidimensional way, right? And in an ideal way with ideal set of data, even though you have to build a plan because you have to do pro forma, financial statements throughout the year. I think every new hire and every backfill, you should be asking your question, should we hire? And sales specifically. Um, do we have too much capacity? Do we not have enough? If we're going to hire, where should we hire? And you should have that flexibility in order to do this, as opposed to just going against a plan because it's a plan. And that has to do with is sales performance where it needs to be, or are we better off focusing our resources on improving win rates and competitive win rates and figuring out how to get, more attach and higher ASPs to begin with? Is it that we're not generating pipeline or the quality pipeline that we need? So why would you continue to hire just because a plan says it is? Is the capacity of our people where it needs to be, or do we need to engage in some enablement? To make them more efficient because the other things are healthy when we get there, improve ramp, et cetera. So it's not an easy decision of looking at this mix of KPIs. If you think of like a grid where you have five or six key KPIs and you create a scorecard of, how does our pipeline look? How does our win rate look? How does our ASP look? How does our, sales productivity look? How does, pick, another one or two that's relevant for your business, and you go red, yellow, green on each, and they create all of these patterns. I mean, that's thousands and thousands of different combinations. Each one of them has a why behind it, and each one of them, some are obvious, if they're all red, don't hire. If they're all green, hire. But a lot of them it depends, which is what Franco said, is you have to go look back at the trends. You have to go look at some drivers of why each of them are there and make this decision. And, there's a question here about collecting the data is hard. 100% that's hard. And the problem with collecting the data is you don't have enough time to analyze it and gain the insights. So where that data collection can be automated, it has to start with good fundamentals in your CRM and your system so you actually have the data. And then using good solutions that build the automation. And at Revcast, when it was just a concept, and I was talking to Franco before, that is, I wanted to build it for sales leaders and not data engineers and data analysts and these sort of things, so that if I have the plan in there, which you often don't have in a BI tool, now I know I'm performing against the plan, and all of these things and all of the numbers and the data is crunched for me. And then I can use my experience, I can use my teams, analytical insights to make those decisions, or better yet, we can start applying, which we are doing here at Revcast now, AI agents to do some of that for you. But yes, those decisions are not as easy as we're doing well, let's hire more, or we're not doing well,
Yeah.
let's hire less.
Yeah, I mean, it's really interesting. Like, our mission has been about one, agents that help you do the rote work of data collection, of data visualization, of data analysis. But then, much of our focus, Jeff, you and I and the teams lately has been how do we become a better co-pilot, a better decision-making system for these go-to-market leaders? And how do we not just say, hey, you should adjust your hiring plan like this, but you should adjust it like this because of these factors, right? And help you actually build a narrative that you can take to convince, because you have to convince somebody. And Franco, you mentioned earlier, like doing this is it's a village of people, right? It's not just people in the revenue org. So you've got to go have those conversations. So let me ask you guys two more questions. One is, how important is it, like, if you look at this and we're talking about multidimensional forecasting, how important, like, where do you guys land on we just need a number versus we need a range and we need to understand what's going to affect that range, plus or minus? I'll start with you, Jeff, because I think I know what you think about this. You've been pretty uh, vociferous internally, but go ahead.
Yeah, I think you need a range. I think hitting a number. I mean, you want the people part of the deal roadmap. You want to drive the accountability through them giving you a number and telling you why, right? Um, but I think that when you look at the different factors that affect a forecast, you want them to all kind of give you a range and a probability of where you think or where they think they're going to end up, and you see where the overlap is. And I think where you see the overlap gives you that kind of high probability range of where you're probably going to end up if you do nothing or just follow the baseline. And then where it extends below or above shows you the risk. If the pipeline one is pulling it down, then like that's where you go investigate. If the capacity one is pulling it up, you know that you're pretty good there, and see where you can use that to actually de-risk the pipeline that's pulling it down, or vice versa. So I do think that earlier in the quarter you start looking at that range again, that hurricane cone, which I hopefully don't see a lot this fall. And as you get closer to the end of the quarter, it starts to kind of get smaller, and you get more precision, and you start to see hopefully the impacts of what this is. Um, I think if you don't look at the range, you get overconfident, or you react too strongly to what might be low. Um, and I think that's the
Yeah.
best way to look at it.
And I want to ask you the same thing, Franco, but before
Yeah.
I do, like, I think the benefit too of looking at this, and we're talking a lot about, like, what are we forecasting, and typically forecasting has that short term, connotation of for the current operating period, the current quarter. But in reality, there's a lot of layers to capacity, to pipeline, to performance that you can use to start projecting multiple quarters out, kind of regardless of what your sales cycle time is, frankly. Because there are certain things that are true about your business now that will probably be true in the future. And there are certain plans that you have around that you can start to get better at projecting, that range for the future. And importantly, get better at seeing the risk and the opportunities that will influence that range in the future, instead of always being a prisoner of the moment. But Franco, where do you land on the one number versus a range?
Yeah, I'm right there standing next to Jeff. No surprise. I think um, just as a matter of practicality, um, if you're providing a range, you're showing a deeper understanding of your business, because you're saying, here's the range, and then here's what affects the range. It's pipeline, it's hiring. Like, these are all the moving parts. It really shows an understanding of the levers that move the variables in your equation, right? Whereas, I'm going to hit $20 million. You're like so what? I have no context to that, right? And I
Yeah.
think that's exactly what you were saying. Like people start to scramble. If it doesn't look like I'm hitting 20, well, now I gotta go find a deal that's not ready yet and I got to discount it and now I'm in a margin conversation. So I think by presenting a range, it allows you to have that conversation, right? And if you've got those different stakeholders of the business as part of it, then they're going to get smart about your part of the business as well. And then that's where I think you really start to build some good cohesion between the teams, right? Because if it's here's our range, and well, the low end of the range is influenced by we don't have the rep capacity. Great. Now my HR and finance teams can go figure out a way to get me to hire in advance or whatever the factor is, right? But it shows a deeper
Yeah.
understanding and you can react.
Yeah, going back to
And,
accuracy, like, are you accurate in that range where they're overlapping, or are you not?
yep.
I think that gives you far more
Yeah.
insights as to whether how accurate you were to the $20 million number.
Yep, exactly.
And that's advice that I could have used at the beginning of my sales managing career, because I came in thinking this is all about bravado and confidence, and this
Yeah.
is my number, and I'm going
Yeah.
to hit
Hit
it.
that nail right on the head.
Yeah, yeah, and I learned, and I've told sales managers that I've worked on my team since then. It's like, hey, a sales forecast call really should be a bi-directional discussion, right? Like we want to understand, Franco, to your point, what's the range, Jeff? What's the range?
Yeah.
And really, really importantly, demonstrating that understanding of your business that says these are the things that are affecting this range. This is what I need to affect it the way that we all want it to be affected, right? I think that's so important for new sales managers to embrace.
Yep.
All right, well, one more thing, and I'm going to talk about an offer that we have for our attendees after that. But besides buy RevCast, which I suggest everyone should do, what is one thing, if you just give like one piece of advice to our attendees that are maybe thinking about, well, how do I shake up my weekly sales force? Like, how do I start to evolve it? How would you start? And Jeff, I'll start with you. I've been in forecast meetings with you. I know how you ran them, and I think you ran them in a way that was different than what I was accustomed to in a good way. So how would you start?
Well, thank you. I would start with asking the whys and challenging what you hear, whether it's great news or whether the news isn't that good, and try to end up into action is what I would say.
Yep. Yep. Franco?
Yeah, I would say something very, very similar, almost verbatim. I tell my kids all the time, like you're allowed to ask why 3 times before it becomes annoying, right? And it's almost the same thing in a forecast call. Like, hey, we're gonna hit our number. Okay, why? Well, we've got the deals in place. Well, why do you have those deals in place, right? So like ask it a couple times. Don't be
Yeah.
annoying, but don't be afraid to drill in. And I think this slide right here. It does a really good job of visualizing it. Like it's a great takeaway for people because everyone lives in the purple deals. And as you're asking and inspecting, like these are a couple of the other areas, depending on your business, but some other areas that you can really bring to bear some insightful questions, get people thinking, and kind of challenge, to Jeff's point, this number that you're getting, or a prediction. So
Yeah.
don't be afraid to dig and poke around.
Yeah, and I
Yeah.
would say
Absolutely.
again, just on the other side, we talk about risk and challenges. Maybe you're confirming the number too,
Mhm.
right?
Yeah.
So it's not just to knock down that number; it's also to confirm it.
Yep.
Yeah. Bolster confidence. Yep.
Yeah.
Totally. Well, Franco, Jeff, thank you both for joining, and thanks for all our attendees. For our attendees, Jeff and I and our teams typically offer something up as a sort of a service offering, but we're going to do a few of these for free in the second half, and that is basically a health check on your current performance against your assumptions and your plan for the second half. And I can tell you, we've done a number of these. We always find actionable things for our go-to-market team to think about, to do, to consider changing, whether that's something large like how you're thinking about hiring, or it's something a little bit more micro, like, hey, what's my best pipeline source for second half given my gap to target? These are all things that we dive into. We'll send out the slides and the recording afterwards, but if you're interested in this, you can email me at dustin@revcast.com and we can have a conversation. With that, though, I appreciate everyone joining, and hope it was worthwhile. Thank you.
Thank you, Franco. Thank you, Dustin. Thank you, everyone.
Thanks.
Thanks, everyone.